Hi, it's David Linker from Davlin Finance Group. On the subject of retirement strategies for property investors and in particular holding costs. I've got two of the key people in our financial planning area. One is Stephen Wormald, our Head of Financial Planning. Hi Steve, thanks for sharing some comments with us this afternoon. And we've got Shan Muthukuda.
Hi.
He's our Senior Paraplanner who actually does the retirement plans for a lot of our property investors when they're ready to come to it. Now, talking about holding costs, Steve and Shan, a lot of our clients have significant holding costs. Can you talk through some of the challenges for property investors in managing this area and combining retirement?
Retirement, you're always interested in cash flows, and so the major item that we look for is how do you marry in the requirement for a cash flow in retirement with meeting your requirements of the properties, which is the property shortfall. That really underpins most of the work that we do with clients. So we look at different strategies that can be brought into place where clients can draw out the monies that they need to meet living expenses or whatever plans they have, boat, caravan, etc., but at the same time meet their property expenses. What we've seen, David, in a lot of cases is that the traditional financial planners will say, look, you can't go into retirement with debt, sell all of your properties, get rid of the debt, put it all into a superannuation fund.
Yes.
We don't apply that to our clients. What we look at is some middle ground where their targets and goals with the property portfolio meet their requirements for cash flow in retirement.
Now, is it possible? I mean, our clients regularly have very high shortfalls of 40k over $100,000 a year. Shan, I know there was a client you saw recently who had been made redundant.
Yep.
So, can you talk through, is it actually possible? Because I'm just looking to see if there are positive solutions for retirement in this case.
Yeah, it is possible. It's not all negative. So we need to look at the client situation first and also to find out exactly what their holding costs are. Because it's very important for us to understand what the holding costs are, otherwise you will be running short of money and there will be so many problems. So its main thing is to understand what your holding costs are, and then we need to find out a solution. There are so many solutions available. So it's not just selling and selling. So we need to look into different solutions and also to find a middle ground.
Okay. Some of the clients say, David, I've got lots of equity. Is there a relationship between having equity and holding costs and coming up with a retirement solution? Or loan to value ratio, I suppose?
Look, it's a simplistic equation. The more equity you've got,
yes,
the more comfortable and the more options you have.
Yeah.
So people that have an equity where they might have very low loans to their property portfolio, some of their requirements can be met by further borrowings or by sale or by a positive cash flow from their retirement properties. If as it gets higher, we have to look at different options because the properties themselves aren't going to pay an income stream from rental.
I see. Let's talk a bit about super, because all our clients have an amount of super or varying amounts. What place does super play in the property investor's retirement plan?
Superannuation is the liquid asset available once you are retired. The problem with the property investors is we got a lot of assets in place, but we have a very illiquid portion. So that's where superannuation comes into effect. Once you're retired, you will be able to take your superannuation either as a lump sum or as an income stream like a pension. So that's where the superannuation is important. So there are so many options and there are so many regulations. So we need to understand what your situation is, whether you can take a lump sum, what are the tax implications, what are the other options available. So there are so many options available that we need to consider. And it's a very liquid asset at your retirement.
We tend to take a bit of a middle course between illiquid assets like property that you can't just buy and sell on a day's notice, to the more liquid, and achieve a balance between the two, and underneath that achieve asset growth, net asset growth overall for the clients, because that's one of the key indicators of success. Have you, at the end of the day, do you have a stable position in retirement for your clients? Do they have the cash flows, and do they have asset growth at the end?
So let me understand this very simply. You're saying that you can set up an income stream from the portfolio, and at the same time the portfolio is increasing in value over time?
that's what you try to do.
Right.
That's a goal that we try to achieve with our clients.
Okay. Last couple of points as we wrap up this discussion. Shan talked about liquidity. Can you talk about why there is such a need for liquidity? Because I'm a wealthy person if I've got assets, but the need for liquidity, how that works through?
Well, one of the things, we really don't care if a client, all a client needs to do is have some assets that he can translate into a cash flow in retirement. Property has its particular challenges because it's harder to get a cash flow out of it. Traditionally, it was seen that you could do it by means of a borrowing structure.
Right.
But that's tightened up in the marketplace lately, so we've had to look at other ways of achieving the same results for clients. Now, we probably look at a situation where for clients we balance out any liquid assets with illiquid, and if it's necessary to look at a sale to achieve the client's goals, we'll look at a sale of property.
Now, in wrapping up, can you cover off tips for people viewing this who have got a financial planner or an accountant that they're considering a retirement plan, the areas that they need to cover off? I know, Steve, you use an analogy of harvesting information together in a single document. What areas do we need to bring together that people need to make sure have been addressed in coming up with a retirement plan?
Well, I can relate it to a problem that we see consistently in that people will focus on their property portfolios because we deal with property investors, and they'll sort of miss to a certain degree what stands around that. We actually need to get all of the information on every aspect of the client's, not only their financial situation, but their goals and objectives as well, and we spend quite a bit of time on that. We develop documents to capture it, and then we translate that into the plan that we eventually discuss with the client.
And also we look at the financial situation and the assets portion for the future, probably about 5 years or 10 years or 15 years. So it's not just the current portion, but also we look at future portion and see whether your retirement is sustainable.
And with the assets, it's also true that we dig in underneath it. So we have to look at accumulated losses, capital gains tax implications of any activity with an asset.
I see.
Or equity harvesting options.
Right.
So
Shane, you put the plans together, you actually write them in consultation with Stephen and the client. Can you just give an example of the breadth of information you need? Because I want people to understand it's large, it's quite a complex matter. It used to be a case of mortgage lending when it comes to property investing. But can you talk about the range of information you bring together to put together a retirement plan?
yeah, actually we look at everything. It's not just mortgage side. And this document will look at your financial situation, your assets portion, your retirement options, and what happens to your property portfolio, and where the holding costs are funded from, superannuation, tax portion, and also importantly we look at risk analysis. So we look at any risk gaps available, and also estate planning areas. So this document will look at a bit of everything. It's not just your mortgages or just superannuation.
Right. And overlaying all of that is actually what does the client want to achieve? What are their key goals? What are their key requirements? What are their retirement time frames, for example? What do they want to do in retirement? Because we have to not only have the nuts and bolts of how they're currently made up, but it's what do they want to translate into as well.
You can look at it as a health check of your financial portion. So we look at
in full retirement.
at full retirement.
Okay, I think that's given us a pretty good idea of some of the issues relating to retirement planning for property investors, which are very different to people who don't have property. So I hope that's been helpful, and further information is available on our website if you wish to get more information about this service. Thank you very much. Thank you, Stephen, and thank you, Shan.
Thanks, David.
Great.